Hey everyone, and welcome back to the channel. Today we're diving deep into a powerful retirement savings strategy that could literally supercharge your nest egg. It's called the Mega Backdoor Roth. Now, I know the name sounds a bit like something out of a spy movie, but trust me, it's a completely legitimate and incredibly effective way to get more money into a Roth account, where it can grow and be withdrawn completely tax-free in retirement. So, what exactly is the Mega Backdoor Roth? To understand it, we first need a quick refresher on regular Roth IRAs and 401ks. With a Roth IRA, you contribute after-tax money and your investments grow tax-free. When you retire, all your qualified withdrawals are also tax-free. The problem there are strict income limits. If you earn above a certain amount, the government says, sorry, you can't contribute directly to a Roth IRA. Then you have your 401k, the retirement plan offered by your employer. You can contribute pre-tax money, which lowers your taxable income now. Or you can contribute to a Roth 401k, which works just like a Roth IRA for tax contributions, tax-free growth, and tax-free withdrawals. For 2024, the employee contribution limit is $23,000. Or $30,500 if you're age 50 or older. This is a great start, but what if you want to save even more? This is where the Mega Backdoor Roth comes into play. It's a three-step process that lets you bypass those traditional limits and funnel a significant amount of extra cash into your retirement savings. And that after-tax contribution is the secret key. The Mega Backdoor Roth strategy hinges on whether your employer's 401k plan allows for two specific features. First, it must allow you to make after-tax contributions beyond the standard employee limit. Second, it must allow for either in-plan Roth conversions or in-service withdrawals, which let you move that money out of the plan while you're still employed. So, let's walk through how it works. Step 1 is to max out your regular 401k contributions for 2024. That's $23,000. You want to do this first to get the maximum tax benefit and any employer match you re-entitled to. Don't leave free money on the table. Step 2 is where the mega part begins. After you've maxed out your standard contribution, you start making additional after-tax, non-Roth contributions to your 401k. Let's use an example. Say you contribute $23,000 and your employer matches $7,000. That's a total of $30,000. The total limit for the year is $69,000. This means you have a remaining gap of $39,000. If your plan allows it, you can contribute up to an additional $39,000 in after-tax money. Now, here's the crucial part. Step 3, the conversion. That $39,000 you just contributed is sitting in an after-tax account. If you just leave it there, the contributions can be withdrawn tax-free, but any earnings on that money will be taxed when you withdraw them. We want everything to be tax-free, right? So, as soon as possible after making the after-tax contribution, you convert that money into a Roth account. You have two main ways to do this. The first is an in-plan conversion. This is the simplest option. Either way, the result is the same. You've successfully moved a large sum of money into a Roth account. Because you already paid taxes on the principal amount, the conversion itself is a non-taxable event. The only part that would be taxed is any tiny amount of earnings, the money made between the time you contributed it and the time you converted it. That's why it's so important to do the conversion as quickly as possible, ideally right away. Let's recap the magic. You max your regular 401k, then you make extra after-tax contributions up to the overall limit. Finally, you immediately convert those after-tax funds into a Roth account, either within your 401k or by rolling them into a Roth IRA. Boom. UVA just executed a Mega Backdoor Roth and potentially added tens of thousands of extra dollars to your tax-free retirement bucket. Now, who is this strategy for? It's primarily for high-income earners who are already maxing out their traditional retirement accounts and still have more they want to save. If you're in a high tax bracket and your income prevents you from contributing to a Roth IRA directly, this is your golden ticket. It allows you to build a massive tax-free nest egg that would be impossible otherwise. Imagine retiring and having a huge pot of money you can draw from without ever paying a dime in taxes on it. That's the power we're talking about. Of course, there are some very important buts. The biggest hurdle is that not all 401k plans offer the necessary features. This isn't a strategy you can just decide to do. Your employer's plan has to specifically allow for both after-tax contributions and in-plan conversions or in-service withdrawals. So, the very first thing you need to do is contact your HR department or your 401k plan administrator. Ask them directly. Does our plan allow for after-tax non-Roth contributions? And if so, does it allow for in-plan Roth conversions or in-service withdrawals of those funds? If the answer is yes, congratulations, you've won the 401k lottery. If the answer is no, don't be discouraged. This is something you can advocate for. Talk to your colleagues, bring it up with HR. Companies are always looking for ways to improve their benefits packages to attract and retain talent. And adding these features to the 401k plan is a huge perk for employees. Also, remember the 5-year rule for Roth accounts. For any Roth conversion, the principal can be withdrawn tax-free and penalty-free at any time. However, to withdraw the earnings tax-free and penalty-free, the account must have been open for at least 5 years, and you must be over age 59 and a half. This is a long-term strategy, so keep that in mind. The Mega Backdoor Roth is truly one of the most powerful tools available for supercharging your retirement. It lets dedicated savers break through the typical contribution limits and build a fortress of tax-free wealth for their future. The key is to check your plan documents, understand the rules, and execute the steps correctly. It might seem complex at first, but once you understand the mechanics, it's a straightforward process that can have a life-changing impact on your financial future. I really hope this breakdown was helpful. This is a complex topic, so don't hesitate to rewatch the video or ask questions in the comments below. And as always, while I love sharing this information, it's not personalized financial advice, so it's a great idea to consult with a qualified financial advisor to see how this strategy fits into your specific situation. Thanks so much for watching. If you got value from this video, please hit that like button and subscribe for more content on building wealth and achieving financial freedom. We'll see you in the next one.